I'm Darius McDermott from FundCalibre, and this is the Investing on the Go podcast. Delighted to be joined today by Eric Moffett, who is the manager of the T. Rowe Price Asian Opportunities Equity Strategy. Got that right on one go. That's a start. So thanks, Eric, for taking the time to talk to us. Asia's a little further along in the crisis, first in, first out. One thing which has been really important is balance sheet strength, businesses' abilities to be able to survive through the lockdowns, etc. I know it's a key factor for you. Do you like to talk about balance sheet, what you look for, and how you analyze that?
Thanks, Darius. It's good to be with you again. When it comes to balance sheets, I tend to avoid balance sheets, which is to say I like companies with net cash balance sheets and not a lot of debt.
Yes, that's strong.
Strong, very strong. So there's not much to analyze, and that always serves you well in downturns. I'd say during this particular episode, though, in Q1, we did reach a point where anybody with any balance sheet was assumed that they were going bankrupt, basically in March. And so I actually found myself looking at a couple companies and investing in a couple companies that had balance sheets just because I felt like the market was just throwing out all the babies with the bathwater. Mm-hmm. But on the whole, I tend to prefer net cash generating companies, and they do really well when folks start to worry about balance sheets.
And, I know that you're normally a low turnover manager, and we've already just dipped into sort of the volatility in markets in Q1, but you've been quite active, actually, much more so than your normal low turnover buy and hold strategy. Would you like to talk us through some of that repositioning and some of those changes you've made?
Yeah, during past market downdrafts, I usually don't do very much of anything because the good quality things just hold up really well, and it's quite easy. This time, however, we saw more dislocation than I've ever seen, and so in many ways, it felt like it was like a going out of business sale, or Black Friday in the States, where people are tripping over each other to buy the bargain televisions on sale. There were just so many good companies that for a few weeks period of time anyway got really, really attractive. So I bought 14 new names in the first quarter. And
wow, that's a big number.
Yeah. I mean, oftentimes quarters go by, I don't buy anything at all that's new. But we saw some real high quality companies, many of which had been on my radar for years, just suddenly fall down to good prices, and we jumped on them. And so we were really, really busy. It was a lot of fun being an investor in Q1, but we were very active.
Any sort of areas, or was it just a breadth of the market that had those sort of opportunities set, or was there any sort of sector that really jumped out and you went, I've been waiting for this valuation?
Well, it was more about geography. And so you mentioned at the beginning how there's sort of a FIFO thought in terms of the virus, and then when countries open, I'd argue it was the same in terms of where the investment opportunity was. So early in the quarter, clearly it was China, as stuff was getting hit there. But then when they had their peak daily cases early in February, that market bottomed quickly and held up like a rock. I suspect China's been one of the best markets globally year to date. And later in the quarter is really Southeast Asia and India. They got hit as they started to get hit by the virus. And so in many ways, I've just been following my attention with the virus as it kind of moves around the region. And really Southeast Asia and India have been most recently hit.
And does that mean you've been adding in those areas, or?
Yes, absolutely. I have. And so in Indonesia, there's a multinational company that is in the consumer staple space, been on my radar for 6 years, used to trade at 50 times earnings, briefly went down to the low 20s. We bought that. And there've been others, but we were just jumping opportunity where we saw them, and oftentimes the opportunity didn't last long, but fortunately we were able to build up good positions in some of these stocks.
Yeah, and you do have decent overweight in consumer discretionary, consumer staples, including a couple of Chinese companies in the sort of hotel, restaurant, leisure space.
Yeah.
You're clearly confident that the Asian consumer is going to come out of the crisis strong and stay strong?
Well, I think the verdict's still out, frankly. I always focus on the working class consumers, the folks buying Louis Vuitton bags and stuff. Their incomes can go up and down pretty dramatically with the economy, and that's not where I focus. But when you look at working class incomes across most of emerging Asia, they've steadily risen over the last 10, 20 years. And in China in particular, over the last 10 years, those incomes have been growing at 8 and 9% clip. Part of this is minimum wages going up, and part of it's just that the workforce stopped growing for demographic reasons a few years ago, but the economy keeps growing, so labor has good pricing power. So far, that income growth story continues. However, I'm a little bit worried about what deglobalization could mean. If the U.S. and Europe stay locked down for too long, that could hit a lot of employment in China. If the trade war tensions, lead to cut orders or folks moving manufacturing elsewhere, that could move unemployment higher and move incomes in the other direction. So that's something I'm watching very closely right now. But I still hold a lot of the names like Yum China, where you got good value for money, good convenience, good hygiene, because a lot of these companies can just take share from a lot of the companies they were competing with that had bad balance sheets or just don't have their scale.
And you touched briefly, and I think this is potentially the big fallout of COVID, is the deterioration in the relationship between the US and China. There's also a presidential election in the United States, and it does appear that some of the anti-China feeling isn't just held in the Trump camp, that it's held by the Democrats as well. Does this worry you? Or do you think this is just something that will blow away with the election as we go through 2020?
Well, there's no doubt that this year we're going to see pretty persistent, I think, negative rhetoric as far as China goes. And a big part of that is that it's an election year, and this is one of the few bipartisan issues we have in America these days. So that's probably not going to change. I think if we do see a change of administration in the States, though, the rhetoric can completely change. The links between the two countries could go through more normal diplomatic channels. There'll be no more Twitter, presumably. And so I think the relationship could improve on the margin. But make no mistake about it, there's no love lost right now. And I think the rhetoric will continue into the election. The thing that concerns me much more, though, is what's going on between China and Europe. So last year, I was often asked, well, wait a second, we got the U.S.-China trade war. Doesn't this mean it's going to really hit China's growth? You're going to have employment everywhere. How can China survive this? And the reality is the U.S. only accounts for about 18% of China's exports. And so while it certainly did hit certain sectors and companies we talked to noticed what was going on with the trade war, they were able to trade with all these other countries. And one of the key things they were all happy about was that the relationship with Europe was still good. Europe wasn't following the U.S. in this trade war. They weren't following on the tariffs. And China's diplomats worked really, really hard to make sure that Europe didn't start to gang up on China and the trade war didn't move to the continent. But now it seems like the opinion in Europe is changing. And, there's the G3 are still critical for China's trade. That's Europe, Japan, and the United States. And if Europe and perhaps even Japan is going to start encouraging their companies to move out of China, then China's got a really big problem. I'm sure they're working real hard on this, but I'm much more concerned about what's going on in the U.S., or rather the Europe-China relationship, than I was last year when it was just the U.S. and China.
Yeah, that's really interesting because it has been the U.S.-China trade war that's dominated that headlines, and
right.
It's a really interesting observation that you're saying that Europe is as important to China as the US. So that is something which I hadn't considered particularly. Another thing which has been going on throughout COVID, of course, is the big fall in the oil price. It appeared that March we had a double whammy as sort of COVID hit developed markets, but also we actually had negative oil on the futures on the West Texas. Does the oil price fall have any particular impact across your region? Generally a net importer of oil?
It's like a gift from God. It's a beautiful thing. The vast majority of the region I invest in imports that oil. And when prices go high, they feel it on inflation. It creates a lot of problems. But the falling oil prices has been a huge boon. When you think of global emerging markets, there's the Asia bit and the non-Asia bit. The non-Asia bit broadly are commodity exporters. Asia is an importer. So these low oil prices are great. And if I look across Asia, India is probably one of the greatest beneficiaries. And these low oil prices have given them the fiscal space just when they need it. Now, looking forward, of course, what goes down can also go up. And if you believe oil prices are going to be maybe higher a year from now, even if they're not high in absolute terms, that can make for some tough comparisons. But, as far as this year goes, these low oil prices are really, really good for Asia.
And are you finding, because we talked a little earlier and you said that sort of China had bottomed first, and then the markets in India had been weaker. Are you finding India particularly attractive given the low oil price and the fact that it's down much more now in relative terms and absolute terms than, say, China, the other big Asian market?
Yes, I am. However, it's unclear to me how long their lockdown is going to last. When you think about the world's response to this virus, you basically have the developed world response, which is to spend a lot of money to help tide people over, help to keep companies going, and this is a great thing. And the developing world has the money to spend. When you talk about some of these poorer emerging markets, though, they simply don't have the balance sheet to keep things locked down for too long. You got hundreds of millions of people who need to work today in order to eat today, and these governments don't have the ability to pay everybody's salary. And so I'm a bit worried about India, which went into this virus crisis already in tough economic shape, now to be spending money left and right and extending the lockdown indefinitely. I hope they get out of it, and I do find really attractive stock prices in some sectors, but I think it's too early for them to declare victory. So I'm constructive, but I'm not really going overweight yet.
And with all the obvious doom and gloom that COVID has brought to the world, you're actually based in Hong Kong, and hence you're further away, further out of lockdown. Has life returned to normal? Is there some light at the end of the tunnel for us, those of us stuck in a lockdown Europe?
Indeed. I was talking to a friend in the States the other day, and he's like, talking to you is like talking to a man from the future, and I hope my future is like that. So in Hong Kong, we were hit kind of in late January, and we've been through a good 3 months of lockdown. And I've got 3-year-old twin boys, and 3 months of homeschooling them, man, that's taken years off my life for sure. The good news is school starts next week. Actually, school starts this week for those boys, so that's good. Restaurants today are absolutely packed, traffic on the roads. But that's because we've had a few weeks now with no virus cases. And so we're one of the few parts of the world that has that, plus closed borders. And so things really are returning to normal. I think for those of you sitting in Europe, there are a few things about our life here that I think are going to be part of your life there. And so, one of them is temperature checking. I probably had my temperature check-in like 9 times today. Get on a bus, temperature check, go in a shop, temperature check. Every building has those thermal scanners testing everybody who goes in. And man, oh man, if you're the person who coughs in an elevator, you're going to be shamed like you've never been shamed in your life. So temperature checks is one. Masks is another. Everyone wears masks pretty much all the time. There's some debate about to what extent this helps when healthy people are wearing the masks, but it's just become the social norm. That does stop the spread as well. Testing. Clearly, we got to get some of these testing bottlenecks unclogged around the world. But once they're unclogged, we're able to test more broadly. We'll both be able to contain the disease, but also be able to, have certificates. Like in China, you literally have an app on your phone that if it's green, it shows that you're good to go and you can go in the movie theater. If it's yellow or red, either because you've been through by someone infected, or you yourself or perhaps sick, you can't go anywhere. So I think life will return to normal. I promise you, even there where you're sitting. But it won't be exactly the same kind of life you remember pre-virus. But I'm here to tell you it's possible.
And maybe then just finally, Eric, if you would just talk us through, I looked through your portfolio and I see Treasury Wine Estates, an Australian holding. Wine consumption, I'm sure, has generally gone up, certainly in the home, if not because we can't go to bars or restaurants. Tell us a little bit about that stock, please.
Very good. So this is, of course, an Australian wine company, but more than half the business is in Asia. And the real driver is the Penfolds wine brand in China. I don't know what the brand equity of that is in Europe. but in China, it's one of the very, very top wine brands. So at the time we engaged, the stock was down more than 50% year to date, covered and rated by our analyst out in Sydney, who's our head of research down there. And so a lot of damage had been done for the stock already. As it pertains to China, a lot of the expensive wine is consumed in restaurants. And of course, they were all closed in the first quarter. Now they're opening again. And their business selling in the developed world had a lot of the pantry loading effect, which is to say in Australia, people just cleaned out wine inventory as they saw a lot coming. Which is a great thing, but it's a high quality branded consumer company that has a global reach, has very good brand equity in China, and we basically bought it on the premise that China clearly was starting to open up, and that part of the business would improve, and that eventually lockdowns would ease in the U.S. and Australia and elsewhere, and we were able to get it at a very, very, very cheap price, and so it's a really great example, I think, of the quality company that never before would have traded at reasonable valuations, but because of all the dislocation in Q1, we got a great price, at least for a short time, and jumped on the opportunity. How can you go wrong investing in wine, right?
Well, exactly. Listen, Eric, thank you so much for taking the time to speak to us, give us not just a tour of Asian stock markets, but also the good news that there may be some light at the end of sort of COVID lockdown that we're enduring in Europe at the moment. So thank you very much for your time today.
Thanks for having me.
For more information on the T. Rowe Price Asian Opportunities Equity Fund, please visit FundCalibre.com, or to subscribe to the Investing on the Go podcast, please subscribe at FundCalibre.com. Please note that these are unprecedented times and markets can react very quickly to news. The views expressed here are at the time of recording and could obviously change. Please remember, we've been discussing individual stocks to bring investing to life for you. It is not a recommendation to buy or sell. The fund may or may not still hold these stocks at the time of listening.